NIO begins the new trading week with a move that reflects both continuity from the weekend narrative and a shift in short-term sentiment. After spending the weekend surrounded by discussions about Firefly's global expansion, the ES6 milestone, and the company's long-term strategic activities, the stock entered Monday trading with the same backdrop of uncertainty surrounding the upcoming earnings report. Yet NIO closed the session at $5.76, up approximately 3.3% for the day. This upward move occurred after a long series of red sessions and represented the second meaningful bounce in a short period, creating a subtle transition from the weekend's structural story into Monday's more tactical market behavior. The weekend had highlighted several developments that demonstrated NIO's continuing ambitions beyond the stock chart. Firefly's right-hand drive expansion into international markets signaled a multi-year strategy designed to grow the company's global footprint. The ES6 passing 300,000 lifetime deliveries reinforced product consistency and long-term consumer traction within China. The introduction of a credit-driven subscription model indicated experimentation with new business platforms. These themes contributed to a broader understanding of NIO as a company executing on strategic objectives, even while the stock faced persistent downside pressure. Monday's session now adds a short-term layer to that longer narrative. The price increase on Monday did not originate from a specific announcement or company communication. Instead, it appears to have been driven by technical, psychological, and anticipatory factors as investors position themselves ahead of the earnings report scheduled for November 25. The stock had become deeply oversold in recent weeks, and the modest upward movement reflects a combination of reduced selling pressure, short-term bargain seeking, and tactical positioning. When a stock experiences extended declines, even a small change in the balance between buyers and sellers can produce an outsized price response. Monday's bounce fits this pattern. Short covering likely contributed to the movement. Traders who held short positions coming into the weekend faced increased uncertainty with earnings approaching. Closing or reducing bearish positions ahead of a major financial report is common practice among short-term market participants. This behavior reduces risk exposure and can generate upward price pressure. Monday's price activity is consistent with this type of adjustment, particularly given the stock's recent volatility and its proximity to a major catalyst. The broader environment for Chinese ADRs also improved slightly on Monday. While the sector remains under pressure due to concerns about competition, macroeconomic conditions, and shifting regulatory environments, the tone of the market was less negative compared to prior sessions. Several Chinese equities showed signs of stabilisation or small intraday gains. A calmer macro environment allowed NIO to benefit from a moderating risk-off sentiment. The absence of heavy sector-wide selling provided the stock with space to register a positive move. Market participants were also looking beyond the short-term noise toward the upcoming earnings release. With the weekend structural developments fresh in mind, there was increased attention on how NIO's long-term strategy might intersect with short-term financial results. Investors continue to focus on margins, cost management, and profitability pathways. The combination of Firefly's expansion, the ES6 milestone, and ongoing brand diversification underscores a company in motion, even if the stock's recent performance has suggested stagnation. This contrast between operational energy and stock market weakness may have contributed to improved sentiment among certain investors. While Monday's bounce is notable, it does not fundamentally alter the challenges that lie ahead. The stock remains below key technical resistance levels. The decline experienced over the past several weeks has not been reversed. The company still faces the same profitability concerns, competitive pressures, and market uncertainty that have defined its recent trading pattern. Monday's move should therefore be viewed as part of a larger pattern of repositioning ahead of the earnings catalyst rather than a reversal of the broader trend. The psychological dimension is important to recognize. After extended downward movement, even a modest positive session can affect sentiment and generate the impression of stabilization. This can influence how investors interpret the upcoming earnings report. If the market perceives the worst of the selling pressure as having passed, any positive or stabilizing signals from earnings could accelerate a rebound. Conversely, if Monday's move is simply a temporary pause before continued downside, the market may resume selling if earnings fail to meet expectations. As NIO moves toward Tuesday and the earnings event, several factors remain central to short-term market behavior. Margin performance will play a critical role in shaping investor reactions. NIO's margins have been pressured by the intense price competition in China, where automakers have engaged in aggressive discounting. Any sign that NIO has managed to stabilize or improve margins could lead to a more favorable interpretation of the company's financial trajectory. Vehicle delivery volumes will also factor into analysis. While NIO's delivery numbers have been strong, the market is increasingly focused on profitability metrics rather than growth alone. Deliveries that demonstrate strong demand but that are accompanied by weakened margins may not produce the positive investor response they once did. The alignment between volume and profitability will be a centerpiece of the earnings assessment. Guidance for the fourth quarter will be equally important. NIO previously indicated that it aims to approach break-even performance on an adjusted basis in the fourth quarter. Investors will look for confirmation, refinement, or revision of this objective. Clear and credible guidance could provide the foundation for renewed investor confidence. Ambiguous or cautious guidance may reinforce concerns about profitability and cost structure efficiency. Monday's price action may reflect increased expectations that the earnings report could provide at least some stabilizing elements. With the long-term developments from the weekend still in the background, such as the Firefly expansion timeline, model milestones, and business model experimentation, there is a growing narrative that NIO is not standing still. Even in a difficult market environment, the company is continuing to build. The market's reaction on Monday suggests that some investors are willing to consider this structural activity alongside the near-term risks. The tension between long-term strategic execution and short-term financial performance will be central to NIO's next stage. Monday's bounce, combined with the weekend's positive structural developments, creates a narrative transition where the company appears to be moving forward operationally, even as the stock continues to face uncertainty. The question now becomes how the earnings report will integrate these themes, either reinforcing concerns or providing reassurance. If the upcoming earnings report confirms that NIO is making progress on margins, managing costs effectively, and supporting its volume strategy with operational discipline, the combination of long-term expansion and near-term improvement could shift the tone of the stock meaningfully. On the other hand, if earnings fail to demonstrate improvement in key metrics, the structural developments highlighted over the weekend may not be sufficient to counterbalance concerns about profitability and competitive pressures. In summary, NIO's Monday close at $5.76 represents a continuation of the stabilizing behavior that began with the weekend narratives. The bounce reflects technical relief, short covering, minor improvements in sector sentiment, and positioning ahead of the earnings catalyst. While it does not resolve the fundamental challenges the company faces, it does serve as a transition point between the weekend's long-term structural story and the short-term expectations surrounding financial performance.